Well, let's put this all together and see what it means for 2024 now. We're joined by Mandisa Zavala, Head of Asset Allocation at Alexander Forbes in studio. Great to have you with us.
Thank you.
So let's start. I mean, are you happy with the CPI data, inflation data, finally coming down, giving us a little bit of a break?
Yes, absolutely. I think it's coming at a huge relief. But when you do drill down into the underlying inflation drivers, what you do see is that it may not necessarily be felt within the consumer or the consumer experience rather, because we look at inflation as a huge basket and overarching economic thing. But when you drill down, you do see that there are still some sticky things like meat definitely is still kind of remaining on the upper trend. But we did get some relief from vegetables coming down, bread coming down. So I think overall from the consumer basket, it's coming as an outright relief, but in certain areas. And so it is a bit murky and mixed.
Yeah. And of course, if you're poor, you spend so much more or a higher percentage of your salary on food.
Yes.
So something like meat can be really important to your budget and to your health. Does this mean, though, that we can look forward to interest rates coming down in South Africa next year? And of course, we are in a global context where interest rates have been going up. But the expectations are that finally they will start coming down next year.
So this is actually a very interesting discussion because the conversation is when interest rates are going to start coming down.
Yeah.
It's not whether they will. So I think the consensus expectation is that we are going to start to see at least one hike next year. Sorry, cut next year from
Please, no more hikes. Don't give us any more hikes.
From the South African Reserve Bank. And that's on the back of also assuming that globally you're also starting to see some cuts on some of the bigger economies like the US and the UK and Europe. And I think, there are definitely some underlying sticky trends towards keeping rates higher for longer. I think we spoke about the fact that rates have only been this high, a couple of years ago. And I think it is important to note that this is a global trend as well. This higher for longer is a global trend. So yes, this is good because we are going to start to see a bit of softness coming in, which could likely mean that.
But when? Like you say, is the question. I mean,
when is the question? So
March, May.
So the consensus expectation is that it could come through in the third quarter of next year. Okay. So the SARB is likely to hold.
So we have to wait. We'll
have to wait, and it's because of the comments you made earlier to say inflation still remains not above the upper end of where the SARB wants it to be because that's 6%, but it's still above the midpoint, and they want it to come down to 4.5%, and that's where they'll be comfortable. And so we're still far off from there, and it's coming down very slowly, and those are some of the things that might make them pause a little.
So what does this mean? I mean, higher interest rates always put more pressure on an economy. Our economy is under so much pressure, and we saw a contraction. Do you think a recession, or technical recession as they call it in South Africa, is a possibility?
So right now it hasn't been factored in, a technical recession. There's an assumption that we could continue to grow in the last quarter of the year. And there are reasons as well regarding that, or that surround that. And unfortunately, one of the underlying assumptions is that the power or energy crisis does seem to ease off in the last quarter, and that doesn't detract from GDP, because we did see this year it detracted or is potentially going to take away about 2% of growth. And so with that sort of easing, there seems to be some assumption that perhaps that could actually look much better. And I think it's possible that we're not going to see another contraction going into the last quarter. So technical recession definitely not in the cards as yet, barring the fact that, something adverse happens, especially globally, externally, that changes things on our front.
The fact is, I mean, and let's end with this, even if we don't go into a recession, growth is not even keeping up with the population. Yeah. Growth is nowhere near where we need it to be if we want to even think of creating jobs and just creating a more conducive environment for so many South African families. What is your outlook for next year, given that there are attempts to fix the constraints, but those have been going on for years? And of course, we have this election with a lot of uncertainty.
Yes. So one of the positives that I have, start with the positives because you've noted the negatives, is that there's a lot more private private sector involvement now in some of the issues that we've had for a long time. Things like the energy crisis, you have more private, I guess, consumption in terms of energy and all of that, which should likely ease things going forward. You've also got some of the issues that we are very, very familiar with that are being talked about, like the infrastructure issue, which has meant that we actually haven't been able to take part in some of the recent trends that would have benefited South Africa. And those are now known, and there are things that are being done currently to help that. That being said, there's still quite a lot that still remains, I think, to be seen. I think we had our recent budget that spoke about the fact that they are looking to now cut on expenditure, and that obviously isn't great for growth. It essentially means that you're constraining growth in an environment of low growth. So I think we're still going to be experiencing very low growth scenarios until we do see some things happening, and the election is not going to sort of bring in any good news. There's a lot of volatility expected around that.
Sure. So another tough year, basically next year. We have to end it there. But thank you for giving us your outlook. I guess there's signs of hope.
Yes.
Let's take the hope that things are being done. Head of Asset Allocation at Alexander Forbes, Mandisa Zavala.